And this month, I'm delighted that Hatty Fawcett, which I think is the coolest name in the world ever, is going to speak to us from the investor angle. And that is interesting because, Hatty, I know you have your own business and you actually support founders, but I've also heard you speak and it really helped me understand the landscape. So I'm going to hand over to you now. And if you want to introduce yourself, your organization, and what you have, and I know you're going to talk to us a lot more about traction and what that means to investors.
Thanks, Claire Marie. And I will quickly share my screen as well, because I've got some slides to get the conversation going. But I do see this as a conversation. I don't necessarily have all the answers, and I think it's always good to get lots of people's perspectives. So whilst Claire Marie has invited me to get a conversation going, I do want to hear from you. I'm just the starter for 10. So give us your thoughts as we go. And there'll be chance for questions and observations at the end as well. But I should introduce myself quickly first. I'm Hatty Fawcett. I'm the founder of Focused for Business. Originally, I was a marketeer, 15-year career in marketing director at Moonpig, Woolworths.co.uk, did a stint at the BBC. Then I did an MBA, and as part of that, entered a business plan competition, which I didn't win, but it rekindled in me an inner entrepreneur that I had lost sight of. So coming off the MBA, I joined a friend I made on that program in his startup, and we took the business from 0 to 3 million turnover in 2 years, which was a roller coaster, but luckily I quite liked the journey. So I then carried it on by setting up my own business, which grew very fast. And so to make the most of the opportunity, I had to raise investment. I hadn't done that before. I didn't know what I was doing. I made loads of mistakes, but ultimately I raised 150,000 angel investment. And then I went on to do crowdfunding twice. Coming out of the business, I then looked after some of the investments Kelly Hoppen made when she was a dragon on the TV show Dragon's Den. So I've seen investment from both sides of the fence. As a founder, what it takes to raise investment, but also what investors are looking for when they back your business. These days I run Focused for Business. It's a training and coaching business designed to make it quicker and easier for founders to raise investment. And in the last 12 months, I've not done quite as well as John's team, but perhaps we're a slightly smaller team. But in the last 12 months, we've raised 4 million for the clients I worked with individual businesses raising between £10,000 and £840,000. And I was also nominated a top 50 advisor by Enterprise Nation in the finance and funding category. So it's been an exciting year. But I was really pleased when Claire Marie asked me to come along and speak, because I share the vision that Angels at Essex have and that they're championing at the moment of creating, if you like, a level playing field, creating a community where founders and investors can speak to each other as equals and join a conversation. And I don't think that's how it is at the moment. In fact, if I move to my next slide, there we go. I'll go so far as to say that it's like them and us at the moment. You can choose where you are. Is the them the founders and the us the investors, or is the us the founders and the them the investors? It depends which side of the fence you're sitting on. And, you know, as a founder, you might be sitting there going, oh, how do I work out what investors want to hear from me? How do I know if I've got my business far enough to attract investment? Are investors going to take all my equity and leave me nothing? As an investor, you might be sitting there going, well, there's all these amazing businesses out there. How do I choose which one I want to back? You might be thinking, how do I make sure they're going to use my money wisely? Have they got their business far enough that it's going to have a significant impact if I put my investment in? And you might be thinking, how am I going to make money? Is there ever going to be an exit? Is the valuation appropriate for the stage they're at? You know, and really, when you think about it, these are all the same issues. We're all dealing with that idea of we want to create value and what is the best way to do it. So put another way, you could say we're all on the same seesaw, that risk and reward seesaw. And you know what? Investing in early stage businesses And building an early stage business is risky. 9 out of 10 businesses fail in the first 2 years of trading. That's a fact. And the sort of risk that you're focused on in those early stages, there's 3 key things I'd suggest, and I'm interested to hear your opinions in a moment. But I think the first risk is about problem and solution fit. So what is the problem that customers are experiencing, and has the business got the right solution to that problem? Are people going to want to buy the product, put another way? The second one is about product market fit. Can you sell your product to customers? Have you identified who the customers are? Can you get the messaging right so they understand what the product is? And is the pricing right so they can afford it? That's product market fit. And the third, once you've got those in play, is about the product channel fit. Can you distribute your product through more distribution channels by perhaps tweaking the attributes of the product and building partnerships with distribution channels? Because that's the key to kind of mass marketing, which is where the VCs then start to get interested and involved. And as a founder, when you're looking at these risks, you're thinking, well, what is the strategy I have to put in place to overcome those risks? And as an investor, you're thinking, what is the strategy they're applying? And do I believe that if I put my investment in, it's actually going to move the business to the next level, i.e. create value? So we're all looking at this risk reward, well, we're all looking at the risks. And the reward, I think, is where traction comes into play, because it's about evidence. As a founder, you need to evidence that your strategy is the right way to grow the business. And as an investor, you need to interrogate that strategy and test for yourself. Is it the right way to use your money to make that business grow? And is it going to deliver a return for you? So we're all on this seesaw. We're in it together, if you like. And for me, as we assess this risk and reward, that's where traction comes into play. So traction is about evidencing what you've achieved so far. It's about evidencing that your strategy is the right one because it eliminates risks. And for me, traction is an equation. It's really simple. It's about minimum viable product. Have you got a product that solves a problem? That's the first risk. It's about, can you, product market fit, have you identified who your customers are, and can you reach out to them and sell to them? And then the third piece for me is about a proven and predictable marketing machine. If you've got MVP and first customers and you multiply them by a proven and predictable marketing machine, then the business is going to grow and you've got traction, that holy grail. Now, as an investor, my suggestion to you is that you want to look for evidence of traction. And as a founder, my suggestion to you is you need to make it really clear by providing that evidence to investors that you've got the right strategy. Now, depending where you are on the journey of building traction, you may have different ways of demonstrating the evidence. For some things, the holy grail is real hard metrics, key KPIs, key performance indicators. But if you're really early in the journey, you may not have as many metrics as you'd like, but you can still do things to evidence the journey you're on. And I've thrown some ideas up on the screen here, but interested to hear from the group in a moment what you use to evidence these different areas. So if you haven't yet got to minimum viable product, you can still provide evidence. You can provide evidence about the market, research. There's lots of companies who do research into key markets. Get your hands on that research and use it. Better still, go and talk to some of your target customers, do some one-to-one qualitative interviews, get their understanding of the problem and talk to them about how your product might solve that problem for them and test whether they agree with it. Better still, start building the minimum viable product and giving it to people to play with and use. And then as they start using your product, get them to articulate the benefit. What does your product do? Does it save them time? Does it save them money? Does it allow them to do something they couldn't previously do? Once you've got to MVP and you're working on getting your first customers, maybe you haven't got them yet. So what could you do? You could interview people as and understand the problem better. So you get the language, because the language then helps you to sell better. Once you've got some customers, you can run some case studies with them, allow them to articulate what it is that they perceive as the benefit of your product, and use those case studies to market them to get more customers. For most people, the holy grail is getting customers and increasing those numbers. So you've got your first 5 customers. Can you get to 50? Can you get to 100, to 1,000? What's it going to take to get more and more? And obviously with that comes increasing revenue, which hopefully gives you some money, some budget to go and do a bit more marketing. Coming on to the marketing, lots of things you can do to evidence your marketing. Do some little, if you haven't yet got big budgets, run some social media trials, do some registration emails, get people to sign up saying they're interested in your product. As soon as you get your hands on some budget, run some tests, do some Facebook ads, some Google ads, some LinkedIn ads, whatever seems to be appropriate on a small scale initially to test what works and what doesn't. You want to build this this engagement mechanism and provide evidence that it works, so that investors can see that if you spend X amount of pounds on Y number of marketing channels, you get Z number of new customers. X plus Y equals Z. Think about conversion rates. Think about the cost for acquisition. It needs to be less than the customer lifetime value, the CLV. These are the sort of metrics, the sort of evidence that is traction. Now, the way I do this is I bring people together into communities. Like John, I run a funding accelerator, but I also run an investor boot camp. And what I want to do is break down the wall between us, that what I've demonstrated there as a dotted line. I want to break down that line, which is why I was delighted to come here and speak. And a quick request before we throw this open to questions. I'm currently doing a little bit of research and development to improve my programs and to perhaps see if there is a better way of doing this. And I'm really interested to conduct some research interviews. I'm practicing what I preach. I'm doing my customer product market fit, my problem solution fit interviews. And if there are any founders who could spare 45 minutes to talk about the funding journey, I would like to speak to them. If there are any investors who could spare 45 minutes to talk about the challenges they find in assessing which businesses to back, I would like to talk to them. Probably the best way to do that is through connect with me either via email, and the email's on the screen there, or via LinkedIn as you feel appropriate. But that's my starter for 10, traction. It's an equation. It's minimum viable product, customers, and a marketing strategy.